where's the fiduciary responsibility of BlackRock, who owns the SLV and have decided to leave JP Morgan as the custodian of the physical metal, even though all their traders are being charged with silver manipulation, fraud, and RICO charges.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics, and now it is part 2 of the interview with Bix Weir. Today we are digging into the silver market, the investigation by the Department of Justice, JP Morgan, and more. So hit that subscribe button and hope you enjoy. Do you think it's possible that some of these banks that are short a lot of the metals, as you mentioned, Ted Butler, he's talked about how they have growing losses. I hear that these banks do get margin calls. Could that be connected to these repo transactions?
I doubt on the margin call side, because I mean they have plenty of access to money in general. So you look at the 2 biggest banks within the U.S. It would be JP Morgan for silver, JP Morgan obviously, and Citibank. Citibank, if you look at the OCC derivative exposure, it's only JP Morgan and Citibank as far as big banks involved in silver. Overseas, there's obviously HSBC, Deutsche Bank, and a few more. But it's very small market and very concentrated short position. So if Jamie Dimon had the short position, JP Morgan probably wouldn't have to declare it because they say it's offset by their physical gains.
Right.
If it's Citibank, they probably have to declare it. So I'd say keep an eye on Citi more than JP Morgan, although JP Morgan has other problems in the derivative book. So whatever way you slice it, next Tuesday, I think, is the conference call for both of them for earnings of third quarter. I think both will have a little or a large hiccup.
Yeah, I've been interested to see this quarter of earnings too, especially with the higher prices. You know, we've seen the stocks in the mining sector go up, but it'd be interesting to see their earnings and also the banks that are short, if anything shows up in terms of a loss on that side. And continuing on in silver, I've been giddy, as you can see, to get your take. We have this Department of Justice investigation where they are arresting traders for spoofing, and
which is a ridiculous. I mean, there's so many other things you can bust them for in the silver and gold markets. Spoofing is like the tiniest of all of them.
Yes, certainly. Although even just sticking to spoofing for a second, are you able to see my screen there now?
I am.
All right. So here, this is today's chart. So again, 2 days after Jerome Powell announced QE without calling it QE, you know, you see this big plummet down, which seems a bizarre time. Is there really someone out there who's like, oh, I better get rid of my silver today before they start printing? And similarly, here, if we can get chart number 2, here's the last Fed meeting on September 18th, where Bix, you can tell me if you agree, it seemed like even a quarter point cut was not fully priced in. So we're not talking about, you know, the market was expecting, you know, 75 basis points and was disappointed. Yet on a cut that's not priced in, again, you see here is around 215 and silver drops 40 cents. Is this not spoofing continuing as they're getting arrested?
No, well, it's not. That wouldn't be a spoofing issue. The spoofing is more like pulling bids at the last second. That's an actual manipulation move.
Yeah.
And it's not done on the COMEX with its futures and options. It is unlimited the amount of shorts they can throw at it. And basically they'll run stop losses. You know, it's funny because I haven't looked at that stuff for about 10 years now when I figured out, hey, this is rigged. Not just part of the time, 100% of the time in every scenario. So it's kind of like, okay, I get that that's going on, but what do? You fight the rigging. You don't fight that it went up or down because of this reason. you pretty much know they can put it to zero if they want it. It's a click of a mouse to do that.
Right.
But you fight the riggers, and that's what I concentrated on the last 10 years is exposing that, hey, there's 300 billion ounces of silver being traded every year. Where's that silver coming from? It's all electronic blips controlled by futures and options and derivatives. So yeah, I kind of gave up on that a long time ago, wondering why they did it at this point in time. They did it to save the system.
So do you think there's actually something legitimate going to come out of this, or is it just something to say, all right, all the silver manipulation guys, here you go, we did something about it, but really just going to leave the bigger issue aside?
I think, yes, I think something will come out of it. This has been long in the plan for the good guys, as I call them. I don't think they want to make it the reason the system falls apart, but it'll be something that will be exposed when the system does fall apart. And it really points to the exchanges and the need to change the way we exchange real assets. And it needs to go back to no more electronic rehypothecation of assets, no more futures, options, swaptions, at least for a while. I guarantee you derivatives will have a dirty name after this whole thing falls apart, and the bankers are blamed and the derivatives are blamed, kind of like they were in 2008. But people don't know derivatives could have destroyed the entire system in 2008. We were hours away from that.
No.
This time I think they will, so people won't allow derivatives in exchanges going forward, and we're going to have to go like trade real goods for real money type of thing. Not 1,000 high-speed, high-frequency trades within milliseconds, driving the price up, down, and sideways. Completely different world after we go through this transition of destroying the old system.
Yeah, it's going to be exciting to see once it finally starts to happen. Obviously,
it's happening. It's happening now. You're seeing it right now.
Yeah, and well, perhaps once we finally start to see silver move, I have a quote pulled up here I think you'll enjoy, because this is my Cliff High question for today's interview. This is from his Riding the Dragon report, which I know you read back in 2017. Curious if you think this is what we will see whenever silver does finally start to move, because Cliff wrote here, a silver price rise that would include gaps in pricing, which would begin at $2 a day to be followed by $5 days, and then within mere weeks, $20 days. On one hand, as someone who's commenting on this publicly, I get, need to be somewhat responsible, not just say silver's going to $100 tomorrow every single day. Yet, as someone with a trading background who's studied this situation, and when you keep pushing more leverage and compressing this, it did always make sense to me that at some point, whether it's next week or if it's strung out another 5 or 10 years somehow, which seems hard to imagine, but that just because of the way you've added the leverage on, that whenever it does unravel, it seems hard for me to see, slow, gradual, and that you might have something like what Cliff describes. So curious, any thoughts on that?
Yeah, I do think something like that should happen. It will be very temporary, because remember, every dollar that silver rises, the 8 major short position holders lose $1 billion. So if you have a $5 rise in the price of silver, you got a $5 billion short hit. So I think it will go like that, and it should go like that. But the reality of the counterparty staying in business in that type of scenario, the chances of that are zero.
Right.
Because no bank, not even JP Morgan, can take a $10 billion hit because silver rose $10. Try rising $100. That's a $100 billion hit for the top silver short positions. Now JP Morgan can handle it because they've got their physical side, the physical part that they're hiding away supposedly in their warehouses. The question I have on silver, and I hope everybody's asking this question, is if JP Morgan, and the DOJ hasn't identified the JP Morgan traders as JP Morgan traders. They call them the traders from Bank A, which is ridiculous. But they know that if they name Jamie Dimon and JP Morgan in this suit at this point in time, they're going to have to go in and say, okay, what's JP Morgan involved in silver? they are the trustee of the largest silver hoard on planet Earth at SLV. And are they rehypothecating that position there? Absolutely. How many times do you think those ounces of silver have been rehypothecated? How much fraud is there? How much silver is even there, truthfully? So it's a big can of worms. I think another large entity that will go down is BlackRock. Where's the fiduciary responsibility of BlackRock, who owns the SLV and have decided to leave JP Morgan as the custodian of the physical metal, even though all their traders are being charged with silver manipulation, fraud, and RICO charges? I mean, this is the kind of stuff that's the reason they keep saying Bank A, and they don't name the people like Jamie Dimon and Blythe Masters yet. I think they will go down with the ship. But again, if you pull the plug on silver manipulation, yes, you will see $5, $10 days and jumps up in silver, which would destroy the financial system. And then you have the network effect of JP Morgan goes down, Citibank goes down, HSBC, Deutsche Bank, bang, 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 every bank in the world. So I think they're waiting for the banks to go down before they say, oh, by the way, here's another group responsible for this, the rigors of the gold and silver markets.
Yeah, I find it fascinating and shocking that, again, the Department of Justice, I hear it's unusual to be as blatant, call them a criminal racket, use the RICO charges, yet here they are holding custody of the biggest silver trust. I don't know whether that's better or worse than HSBC, who, according to articles I've read, if you're a Mexican cartel and you need to know where to go, they say call up HSBC.
And it is also unprecedented that it's the Department of Justice coming down with this ruling, not the CFTC, who has responsibility for all the COMEX trades. I mean, the CFTC did 3 investigations into silver rigging. Everybody was screaming about what the DOJ has now accused these traders of. It was obvious to everybody, but the CFTC and the SEC are basically put there to run cover for the manipulation game to keep the system going. And at the end of the day, they profit massively off manipulation, but their excuse is, well, we had to. JP Morgan will say, we had to take over the Bear Stearns short position because that would have destroyed the system. We were just trying to save the system. Well, if the system is that wobbly, maybe that system should not exist at all.
Yeah, I don't know what else they could do to make it more wobbly. Maybe put Mark Rich as the custodian, or
God rest his soul. He's gone. Mark is no longer in this. Anybody who wants to get smart on silver, gold, physical commodities at all, read a book called Money Men about Mark Rich.
Metal Men.
Metal Men, yeah.
Yep.
Scare the crap out of you. Scared the crap out of him when that was published.
I've been going through it, just about finished, and it's interesting how things have evolved from some of the techniques and ways he was, we'll buy up all the suppliers so we can stiff arm these guys, and quite a racket, the banking world.
But those companies are still there. I mean, those are still the 2 companies that control the entire, Glencore and basically the Mark Rich and Co. split off into 2 companies. One of the companies was public, which was Glencore, and the other was private. I forgot the name of it now.
Trafigura?
Yeah, Trafigura.
Okay.
That was where all the criminality went on, and then Glencore was playing the other end of the spectrum. So it's crazy that those 2 companies are still around. Huge, massive derivative players in commodities. Criminality beyond belief. And it's been proven many, many times. When that started getting exposed, the CEO of Trafigura, a longtime buddy of Mark Rich, ended up dead in Colombia. So yeah, it's a dark, dark world in the commodity business down when you get to the underbelly.
So that was part 2 of my interview with Bix. And since we were talking silver, I'd like to mention real quick, I actually do have a book that will be coming out in the next few months called The Big Silver Short. Or basically, I interviewed 15 silver experts, of which Bix was one, So if you'd like to take a look at that, there's a link where you can click below. But certainly if you're into silver, I think you might enjoy that. And in either case, the last part of the interview with Bix will be posted tomorrow, where we cover Veritasium, which is a crypto that actually gets into addressing some of the issues caused with this fractional reserve system, the fractional reserve system we have in the metals. So hit that subscribe button so you can get notified as soon as that's released, and I will talk to you soon.